Hey everybody, this is Jeremy Johnson coming in with the Market Bias Report, our weekly update for Sunday, May 21st for the upcoming trading week. Starting off as always on the S&P 500. So we've been talking for literally a month or more. I'm going to put this out on a weekly chart. Almost 2 months about this 4,200 level breakout in the S&P. And we finally got a daily close on Thursday of last week above that level. We closed at 4227.25. Nice big bullish candle right at the absolute high of the day going into the close. Friday, we had a little bit of news on the debt ceiling issue from Washington and policymakers not being able to come into an agreement. And so we backtracked, gave a little bit of that up. I actually don't mind that we gave that back up and closed back down around 41.90 at all. Mostly because we had already had two really big green bars moving into that breakout, and having a little snapback retracement like we had on Friday with the start of trading here Sunday afternoon on the futures chart right at that 4,200 breakout level. That actually kind of resets the pattern from a risk to reward perspective and gives a really nice potential entry. So I'm going to be watching this breakout very intensely here the rest of the day today for the futures, and then going into the opening bell on Monday, tomorrow, May 22nd. And yeah, looks good to me. I really like that snapback retracement. This has to have a nod to the bulls. Absolutely. Going back out to the weekly chart one more time, you can see just a very nice prolonged consolidation period here. Rising 9-period moving average on the weekly chart offering good support in that potential breakout zone, really looking for a run up to the previous highs back here from August of last year, and that would be up to 4,327 or 28, right in that ballpark. So nice little pocket of clean air, open air above us here for potential run in the S&P 500. Let's see if we get that with the next couple of days going into the trading week. Moving on next, let's go to the NASDAQ. Weekly chart looks awesome. We had that nice consolidation pattern already for the bulls uh, leading into last week, and last week got a major bullish candle on that breakout. Now the NASDAQ is a little bit overextended. We are seeing a little bit of a snapback retracement here as well. I wouldn't mind seeing this actually come down and touch the 9 EMA here, somewhere around 13,640 or 13,650. If we get that nice little consolidation retracement pattern here and then a confirmation candle higher, that would signal to me that all the major players in the NASDAQ that have really led the charge over the last few weeks have reset their patterns and might be ready for another go. So really like the bullish nature of the NASDAQ. It is a little overextended. We are in a flag pattern right now and waiting to see where that flag pattern retraces into for that next bullish push. Going out to the Russell, the Russell's cleaned up a little bit. I don't hate it as much as I did previously. And on the daily chart here, we can see that we have reclaimed the 50-period moving average here just barely. And if that closes with a nice close today on Sunday, going into the trading week, we could see appreciation up to about that 1830 level. So we have very, very solid resistance up here around that 1830 level. We also have the 200-period moving average there. So we're not going to see a ridiculous run, but we are kind of starting from the middle of this big range that we've defined in the Russell 2000 for quite some time now, and have the opportunity to push up towards the upper end of that. Hopefully, if we do get that bullish move, we can see some consolidation there, and then ultimately a break higher that would be playable. Right now, I'm not sure I'm going to dabble here. It has some cleanup to do. I do see potential for the bulls to come in this coming week and push into this resistance level, but I'm going to be looking for a chart pattern where we push up into it, we go sideways for a little bit, and then we break and have a reset on that break so we have a good risk to reward perspective on it. Last but not least, on the major indexes, we have the Dow Jones. Nothing really to see here. We did get a little bit of a pop, got some consolidation. We're right in the middle of all the moving averages and stuff. Not really the greatest trading pattern in the world. I'm sure there are some stocks in this area that have better trading setups than others, but nothing to see here on the index level. My focus is definitely going to be the S&P first and foremost on that break of the 4,200 level, and then looking for the NASDAQ, like we just talked about, for a little bit of a reset, a little bit of a retrace, and then rock and roll from there. If we go out to crude light, the crude light chart is kind of interesting to me. There's nothing really to do on it right now. But if we can reclaim the 50 period moving average here in the previous resistance zones, that's going to be basically right at $74.50 would be the trigger that I would be looking at. If we do get above that, we do have some open air and some positive themes in the marketplace that should support crude light. Going out to Bitcoin, gross, still gross. We had a nice run for most of this year, got stuffed out. And now this looks to me like it has a bearish lean. If we do get back above these moving averages, I'm just going to call it 2,800. We could see a little bit of appreciation up into this diagonal resistance line that we have in the sand. Ultimate breakout for the bulls is going to be above the diagonal resistance there. Not really a whole lot to see from a bullish perspective until then. And right now, actually, this kind of looks like a low base that is threatening a breakdown. If it does break down to the downside, we'd be looking back at about 25,250, or even potentially slightly lower than that, if it picks up some momentum. And we all know that Bitcoin and other cryptos definitely can get momentum behind them when they do have breakouts or breakdowns. So nothing to see here yet. Ultimately looking for bullish confirmation above the diagonal resistance. Not really interested in shorting it, even though there is a pattern for it. So just waiting to see what happens over the next couple of weeks for Bitcoin. Going into gold, man, let's put this on a weekly chart. We had a significant slowdown in momentum. You can see we had big bullish momentum, retrace, big bullish momentum, retrace, came back up and barely set a new high and then retraced back down. And on the daily chart here, this actually is an M formation pattern. M is for murder in the stock market. You'll hear traders say that all the time. It's not good. Let's put it that way. Broke down. It is trying to fight to get back above that resistance level. Honestly, I see it probably coming back up into the 2000 range before it potentially rolls over. If it does want to try to reclaim its bullish nature, we really need to see it get above about 2015 and hold there. Hopefully consolidate sideways for a few days and then ultimately break higher. If you do have gold positions right now, it's probably not a bad idea to start thinking about selling some covered calls. I wouldn't cover full positions, honestly, because there is a decent chance that if we do get a debt ceiling resolution in the news through Congress and the White House, that could end up hurting gold. But in the chaos leading up to it, any chaos on the economic landscape is good for gold. So, we have a while yet until the final deadline for that coming up in June. And I wouldn't be totally surprised to see some bullish appreciation here in gold in the short term if we have more chaos on that front. So personally, I am covering partial positions right now, not covering the full thing because I do want to have the ability to have that run if we do get it from the chaos with the debt ceiling. But this overall chart pattern does not look good. We have this kind of rolling top, rounded top here. The M for murder breaking down. Now it is fighting back up against resistance and it's underneath all of its moving averages. You have to give the nod to the bears ultimately here. Going out to our copper futures, kind of a gross chart. Copper is very economically sensitive and oftentimes traders look at it as a barometer, forward-looking barometer for the health of the overall economy. It's not great that it's below all of its moving averages. It hasn't been able to even reclaim its 9 EMA. That has been acting as pretty significant resistance for quite a while. So nothing to see there on a trade, but seeing some weakness in copper. Natural gas, we have talked about this a number of times over the last month or two, and I actually am really loving the pattern setup here. We had a breakout above resistance here, had almost 11, almost 12% gain in one day on the natural gas futures, which is just a huge move for it. We are getting a little flag pattern. Actually, I am really excited for this flag pattern. What I would love to see is a continued move to the downside here today, Sunday on the futures, followed by some kind of a little doji sitting right at this rising 9-period moving average. If we get that, I will definitely be looking for a play above whatever the high of that candle is, the doji signal candle there. Looking for a play higher, and the futures market has way too much leverage on natural gas futures, especially. So looking at UNG for the ETF to be able to play that, you can see the chart is basically the exact same, have a little bit of a pullback here, and then rock and roll to the upside. So that's what I'm looking for in natural gas. Finally, platinum and palladium, and then silver. Palladium actually looks interesting right here. I don't like the oversized volatility and the moves that we've had, but we did have a big bearish downtrend, a nice big green bullish candle with good high volume. And now we're looking to try to press back into that. So I actually have an alert that is almost about to trigger. We're at 15.18 right now, and at 15.20, I have a trigger for a potential day trade on that on the futures market. So interesting there. Going out to platinum, this one's a little bit too chaotic. We do have kind of a rising triangle, ascending triangle pattern starting to form here. If we do get a back above the moving averages here, I can see some appreciation back up into the diagonal resistance. But between the two, platinum and palladium, I would rather play the the palladium position. So anyways, on those, I'm looking at this chart instead for palladium. Finally, last and not least, silver. Silver had a massive breakdown along with gold. It actually front ran gold to the downside, below all of its moving averages. Not really a trade to see here. It's going to be a while before we have a good, clear setup on silver again. Now, going out to our sector ETFs, rocking and rolling through them really quick. We've already talked about gold. This is the gold miners ETF. It usually reacts a little bit more volatilely than the actual gold instrument itself. Nod has to be to the bears. Same thing with the actual gold ETF GLD. Silver, just talked about that. USO, a trigger above somewhere in the neighborhood of like 65 is interesting to me. Play back up into the range with the ultimate resistance being 71.75. Probably other places in the market I would rather put my money, but it is an interesting little reversal pattern here. And we do have a higher high, higher low kind of setting in here on the daily chart. Going to XLB, our materials, nothing really to see. We still have a fairly significant resistance on the diagonal channel. This needs a couple more weeks to try to clean itself up. An ultimate breakout above the diagonal resistance is going to be playable in the future. So just watching to see that develop. Communications. Communications is one of the places in the market that has really good strength right now. I would like to see a little bit of a retracement back down into the $60 level. If we get a retracement back down to this breakout level, a little doji confirmation candle, and then rock and roll to the upside, I would really like that. It's not technically overextended on our RSI, but it's had a pretty significant run here. It's up 8.25% in the last 2 weeks, so I would like to see it settle down a little bit before re-entering a trade here. On energy, not much to see. XLF actually has gotten back above all of its moving averages, has a pocket back up to resistance here around 33.75. I am not interested in playing it. However, again, there are other places in the market that I think there are better risk to rewards, better returns. So I'm not really interested in playing that right now. Industrials, kind of gross. Tech overextended, but did have this really nice, clear breakout from the $152 level. Again, in tech, I would like to see a little bit of that retracement before another rock and roll chart pattern for the bulls on the upside. In consumer staples, gross. It has broken back above some longer term diagonal resistance. So that's really nice. It needs to clean itself up here for any kind of further appreciation. And there's a lot of resistance around $78. So I'm not super interested in that. If we have a few more weeks where it just kind of trades neutral in a range here, let some of the longer term moving averages come up and act as support, then I would be interested in the $78 breakout. Right now, I am just going to set myself an alert for it just so that I know when price does get back above that level. But right now, not interested in it for this week. XLE, nothing to see, below all of its moving averages, stuck in a range. XLU breaking down. Wouldn't be surprised to see this rally for a day or two and then roll over again. Nothing to see here. Healthcare is also kind of looking gross, sitting on its moving averages, but two of the three are rounded and pointing down. MACD is still showing bearish. I'm assuming that we are going to go either neutral or slightly bearish from here, excuse me. And finally, last but not least, consumer discretionary. I wouldn't mind seeing this come back and pull back into our breakout channel around 149, give us a signal candle, and then rock and roll. I think the lean overall does have to be to the bulls, but I'm not going to chase after three big bars to the upside and over 4% gain in 3 sessions. So I'm going to look for a reset pattern on this before diving into that. Anyways, guys, keeping it quick and simple for you this week. Keep me posted. Let me know if you have any questions on any of the charts that I discussed, or if you want me to look at any other charts you are looking at. Finally, before we close out, just looking at our economic calendar, nothing up on Monday, and then kind of a light week, honestly. These are important economic pieces of data that are coming out, but honestly, I think most of this is going to be overshadowed by the debt ceiling issue in the White House. So I think all eyes are pretty much going to be on that. The FOMC meeting minutes are going to be released. And honestly, all that's probably going to say is inflation is still here and we're not ready to cut rates and might actually raise one more time in June. I think the market kind of knows that we're not going to be cutting rates anytime soon. I think at best we are looking at a pause. But I think the market is prepared to handle another 0.25% increase in June if it needs to. So I don't think that's going to be much of an issue. As for the rest of this, like I said, I think it's going to be overshadowed by the debt ceiling issue. So most eyes are going to be focused on that. Anyways, guys, hope that helps. Trade safe. Enjoy the rest of your day. Take care.